Ladies and gentlemen, welcome to the live show. It's Tuesday, the 15th of July. Here we are, back live again, and today I'm going to talk to you a little bit about trading with the trend. Don't forget, trading is risky. Most traders lose money. If you don't like losing money, well, you shouldn't be trading. Nothing I say constitutes financial advice. I don't give financial advice. The show's just for entertainment purposes only, that you can learn and find out what I do and see if it matches and works for what you do. Let's have a look at the charts. Let's see what's going on today. We'll have a look at the news in a moment as well. The S&P 500 does appear to be going to the moon, even though the tariffs are back in contention again, back on the chat, and it looks quite interesting. We'll see where we go with that. It's going to be an interesting day. Let's see how many people we get on the show, and then we can start perhaps going over a few procedures and talking about trends and how trends can affect your trading. I'm actually putting a video together for you guys for this week with regards to how the turtle traders used to trade. It's quite interesting, actually, and the reason I'm doing that is because their strategy, not the system. System was, just remember the system. Don't get excited about the system. I will show you that as well. Not today, but, in the video. With regards to their system, just remember they only won 20 or 30% of their trades. So there's no great thing about the system except the fact that the strategy was very similar to ours and the strategy paid off. And I'm going to go over that in detail on the video. It's quite interesting how that strategy actually paid off for them and how they made money. And it's actually, I was looking at it and thinking, it's quite interesting how that actually worked out, how they got a very similar system, strategy. But I think the main reason for their system is they were using also trading with a trend, but breakout systems, and breakouts can give you quite large moves. For example, this Euro Great British Pound, I am long on one of my other accounts, and I did take that long on that breakout, and it has moved quite nicely, which is basically beyond the last prior high. That actually does do quite well. Now, on the Brent crude oil, I was long on a few accounts here, and I sold them all based on that huge red candle move, which was obviously either due to the dollar or the news in the market. And it did break to the downside as well. So I took profit on all of them for now, and I'm looking for a new entry back into the trade. So I'll see where we go, see where we get back in, see where the best position is to get back into that trade when we're ready. So I'm just waiting for everybody to turn up before we start talking about real serious stuff, before we go into learning and that sort of thing. The United States dollar, South African rand is still surprising me, but the market will always surprise you more than you can imagine. Since it's Coffee with Rob, you might as well have some coffee. Get yourself a cup of coffee, sit down and watch the show, man. Enjoy yourself. Enjoy yourself. I might not be that exciting, but yeah, sometimes you might learn something. Who knows? But this nasty one, as I say, I took this trade quite early based on the fundamentals of, I expected the South African rand to do very poorly based on the fact that it's really being sort of sanctioned almost by America. The economic policies here are terrible, and things aren't going well. So I was looking at that and thinking, well, surely the rand's got to weaken based on that, and it didn't. It's actually stayed pretty strong. There is a bit of weakness here, but I actually got in somewhere up here, and it's come all the way down, almost to my stop loss. Now it's working its way upwards in the other direction, but it just doesn't seem to want to go. But there is a demand of money lying here. So I'm kind of thinking maybe it'll grab that, carry on from there, and start shooting up. We shall see what happens. I wonder if YouTube's even, promoting the video out there today, because I'm not seeing too many people on the show today. But we'll see what happens. We'll see if anything improves, if anything gets better. I normally wait until we got about, at least 20 people on here so that I can actually show you guys something and show everybody what's happening, etc. So let's wait for that and see what happens. Okay, so yeah, this US dollar South African rand trade has turned against us today. It was going okay yesterday, but it's now turned against us. The gold trade is doing okay. It broke through here, so we took the long trade. It has gone long. It came back again to sort of try and retest. Didn't go all the way back. Now it's starting to find its way up again. I think if it breaks that prior high there, we can be looking at it going all the way to target. So that'll be quite reasonable. That'll be quite a decent trade as well. If you guys prefer the other charts, they are here. We can go and have a look at them as well, the green ones. I'm just using this because somebody was talking about my logical trading thing was in the way, or they couldn't see the lines or something. I don't know. Doesn't matter which charting package we use as long as we can see the charts now. Yesterday I actually called the DAX short, and that's gone against us. It's gone back up the retest. Now the question is now, will it break back into its trend and carry on upwards, or will it just be a retest and break down? So it's 50-50 at the moment as to which way that's going to go. But I would be very cautious because the news is starting to point out that the economic data might start showing that the tariffs have affected the economic data in one way or another. I'll show you the news now. So I'm thinking about that, and if you look at this is the S&P 500, and it doesn't want to break its prior high. It's creating a double top here. So it's interesting to see whether it will break to the upside. But if this breaks to the upside, that's a strong bullish trade, because we've trended all the way up here. Now we've created a kind of a flag pattern range, and now it's probably going to resolve to the upside, or it's going to give us another down leg. We'll have to see what it decides to do. It takes time sometimes. Sometimes these things take a little bit of time before they play out. So you might just get another leg down before you get a leg up. I keep getting guys telling me that there's 3 ways in the market, because I always say there's only 2 ways. It's 50-50. You buy or sell. And I keep getting guys telling me, no, there's 3 ways, because there's sideways as well. Guys, there's no such thing as sideways. No such thing as sideways, because sideways means that it's a flat line. It's a line like that green line there. And you'll never see a chart that looks like that. You'll never see a product or a trade that looks like that anywhere on the planet. I've never seen one, and I don't think I ever will. So when a market is bullish, it goes up. When a market is bearish, it goes down. When a market is in a range, it goes sideways. But sideways doesn't mean sideways as in a flat line. In a range, you can make a lot of money. It's a very, very powerful thing, the range, because in a range, it goes up, it goes down, it goes up, it goes down, it goes up. You hear what I said? It went up and down a number of times within that sideways move, and it's very tradable. You can make a lot of money out that, but it's still going 2 ways. It's still going up and down. And if I put this on a lower time frame, on a much wider scheme of things. So guys, don't get confused with people talking about sideways markets. There's no such thing as sideways. Sideways just means it's moving in a range, and if it's moving in a range, it's a very, very tradable product. Hey, Greg, message before about learning to use stop loss. Realize that you see the losses when you're stopped out, but you don't see much bigger losses that you would have had without a stop. Okay, so Greg, I don't know if you know how we choose our stop loss. I'm just going to quickly go through stop loss for you while it's still quiet and there's not a lot of people on board here. And what I normally do, Greg, is I'll have a look at the trade, and I'll look and say, I want to go long on this trade. Where do I want my stop loss? I want my stop loss in this area below the lowest low, and in the last, say, period. Okay, you don't have to go all the way back. I mean, we're talking about a recent period, so we're looking at that low there. We're saying you could put it there as well and say, well, if it gets past that's pretty low, so I could put it there. But I decided to put it down here because I was trading in this area before this, or in this trend line here. So I decided to put it down here, and that was my decision. And then all I did was I work out how many contracts I would need, or lots I would need, to get back up to my cost, which was somewhere down here. And that worked out to 0.02 lots, which gave me $200. It wasn't 250, but close enough in that region. Always keep the stop loss within the region. You know how much you're losing in that area. Lose as little as possible. That's what I say. Lose as little as possible, make as much as possible. On this particular trade, this is a very poor example because I took a one-to-one trade. You actually want to try and get more than one-to-one. But I do this sometimes because I know that if I start going into profit, I can move the profit away and I can actually add to the trade, and I can also just put a trailing stop up and follow it up. So I'll probably make more than one-to-one if it goes through that, unless something goes drastically wrong and it starts to fall. So what I look at is, there's my stop loss. That's where I want it. How many contracts or lots or whatever pips can I buy back to my cost? And then that works out your stop. Then you've worked out your stop loss. Then you just work out what your profit might be and work it around that. I could have taken more here and made it more than 250, but on this one I just made it 200, and it's close enough to what I want it to be. The idea is not to try and take more loss on any one particular trade, or too little loss on any particular trade, so that you can't actually make decent profits from all the trades at the end of the day. Now, on this particular one, if you get past the prior highs, you could actually double the trade up and make it a lot bigger if you wanted to. But that's how you take your stop loss. And the best way to take your stop loss is effectively identify where you want the stop before you take the trade. For example, this United States dollar, South African rand, I identified that I want my stop loss below those lows, far enough away that I can see that if the trade gets there, firstly, it's invalid. And secondly, no one's going to get to my stop loss there if they're picking out orders. And then I want my take profit up there, which you can see in this case is a proper trade. I've got a 240 stop loss and a 433 profit. That's kind of where I want it. That's kind of what I'm looking for. I know that the South African rand has been way past the 19. This is 1860. I was expecting it to get there based on the fundamentals. And if it doesn't, then I'm wrong. And that's as simple as it gets. It's as simple as it can go. Hi, Brewman. Hi, Blue Mango. Good to have you guys again. Good to have you on board. Today, I'm just going to be talking a little bit about trends and trend trading. And because one of the things that came to mind as I was discussing earlier, and I'm putting a video out for it this week for you guys, is how the turtle traders traded and how they made $175 million in 5 years, and what it was all about. Watch that video. You'll enjoy it. I think I'll bring it out on Friday. I'm still busy fixing it up. But yeah, it's an interesting subject. But don't get caught up in the actual system, because the actual system, that, like I say, they only won 20 or 30% of their trades, and most of the money is is made in the strategy, just like us. And that's why I thought about that. It's actually uncanny how their strategy matches similar to mine, and I never actually even knew about these guys so much before people started talking about it. And I was like, hang on a minute. The actual strategy that I worked out for myself is actually very much in line with what they were doing in 1983. So it's quite crazy, actually. When I looked at that, I thought, this is crazy how this aligns so well. I'm going to have a look at Bitcoin, because Brewman's here, and I know that Bitcoin went so long, and it has now actually turned short. This is the Nikkei. The Nikkei was going down. I actually got out of the trade yesterday on one of the accounts, but I was short and I took the profit, and I'm glad I did now. BTC. Yeah, look at that. It broke through. It broke to the upside, which is absolutely insane. Broke to the upside. Did a good breakup, and look, it went past the prior high, broke up, and it kept on going. Actually, I thought, wow, that's quite crazy. But now it's coming back to take some money. It's correcting a little bit. Will it come back to the 110? I don't know, but it's broken through the 110, 112 now. It's broken to the upside, and it's heading on up. So Brewman's going to be a really, really rich guy. if he's not already. And yeah, that looks pretty good. That does look pretty good. Yeah, it's correcting a little, and everything does that. Nothing goes up in straight lines. The one thing you have to, and we're going to talk about trends today, but one thing you have to understand in the markets is nothing goes up in straight lines. Nothing goes up in straight lines. It always up, down, up, down, up, down. It's always going to zigzag. Straight lines, lamp pole formations are dangerous as well. I call it a lamp pole formation when it goes straight up like that and it keeps on going. Lamp poles have a tendency to fall over unless they're supported by something. So, you got to watch out for that as well. But yeah, what this is, it's coming back to fetch some money because it's kind of run thin. What happens here, don't look at it as lines. Look at it as human beings that are trading, and think to yourself, if the price is that high, you kind of hesitant to put your money in and buy it. You're kind of hesitant. You're thinking, well, yeah, it's kind of reached a serious overbought situation. It's expensive. In your mind, it's expensive. Well, nothing's expensive in the stock market. It's normally good if it's expensive. You're still thinking, if I put my money in there, I'm the last one in. I'm going to lose out. It's psychological. You're not the only one. That's why it comes back, because everybody's thinking along the same lines. Everyone, and then there's a whole bunch of people that did buy at these lower levels, and they've made this huge profit. So they start selling and taking the profit because they're thinking, well, I'm going to lose out on my profit. So thus you end up with this correcting scenario where it's just going to fall back slightly. There's nothing really causing it apart from the fact it's just going to fall back slightly. It's going to come and fetch some money. Could come all the way back down here because there is a level of money lying here at this level, a strong level of money. I mean, you could literally draw it in and say, that level is serious. If it gets back to that level, it's gonna bounce like a spring because of the amount of money that's lying in this area. So keep an eye out for that. It could also bounce from here as well. There's money lying here as well, but it seems to have broken past that. And it looks like it'll come down and take that demand of money down there, which will act like a spring. Hi, Luigi. Good to see you again. So, yeah, trends. I mean, if you look at trends, the trend is your friend. And I love trading in trends, besides just the simple support and resistance that we always put in. I mean, the simple support and resistance is always easy to trade, but a trend can actually make you so much money if you go with a trend. And look, counter trend trading can be even better than trend trading. For example, if you get a counter trend where it breaks the trend, for example, in this case, it broke the trend somewhere down here, take the long trade and off she goes. That will give you a lot of money, but trading in the trend can also buy you a lot of money. And that is, if a product is trading in that trend and you've got a nice railway line going, you can actually buy at the bottom, sell at the top, buy at the bottom, sell at the top on a regular basis, because it normally goes for quite a while, these trends. And then when it's broken the trend, and when it breaks the trend, that should be where you stop out or get out of the trade. And that's the basis of trend. And, well, look, like I'm going to show you in the video, what the turtle traders used to do is count back a number of candles, and I'll tell you all about that in more detail. And then they would have a break off in that area of the prior highs and things like that, prior lows. They would work on that basis, and that basis does work because it's breakout trading. So this would be a situation like that where it breaks that level and flies to the upside. That's a breakout in the trend going up. And if you're on the right side of the trend, then you can take some money out of it. But one of the important things to do with trend is have a look on the higher time frames before you get started. So, for example, here's a day chart. And here's the problem on this particular product. You've got a bullish trend on the 4 hour. Let's go back to the 4 hour. I mean, effectively, you've got a bullish trend there. But when you go to the day chart, it's a bearish trend overall. And you've got to keep that in mind. You've definitely got to keep that in mind when you're trading. Think, well, wait a minute, the overall picture is bearish, but on my time frame, it's bullish. You've got to keep that in mind when you're trading always, that there is a possibility that the overall trend is against you, and you're trading against the overall trend. And the lower down you go, the more bullish it might get for the time being, but the overall arching picture. But you see, you've got to use your logic here and think, well, if all the lower time frames are showing me that it's bullish, there's a good chance that it's going to change the trend on the higher time frame. But if all the higher time frames are showing me that it's bearish and it's working its way downwards, then we could be pushing all the lower time frames into a bearish mode as well. Simplest way to do it is just to make sure that it stays within the trend, and if it's breaking out of the trend, getting an idea of where it's going. But if you've got a whole bunch of conflicting information, for example, it's bullish on the day and it's bearish on the 4 hour and it's bullish on the 1 hour, then you're just looking for trouble. If they're all the same, you've got the perfect trade. Then you've got a decent trade with. So trading with a trend can be easy if you pick it up correctly. So for example, if we go into the DAX, we go into the day chart, you've pretty much got a bullish picture on the day chart, and then you take it back to the 4 hour chart and you pretty much got a bullish picture there as well. And then you take it back to the 1 hour chart and you've probably got a pretty bullish picture there as well. So when you start looking at that scenario, you're like, okay, this is pretty bullish. But what I was looking at yesterday was the break of trend and giving me the counter trade, which in all likelihood could happen. But if you look at the DAX here, you've got a number of things going on. Now, I don't want to confuse you guys with too much stuff, but if you look at this, it created a gap down, which means it closed the market there, it opened the market, it gapped down on the open market. And those gaps always get filled. Not necessarily in the same day, same hour, same week. It could be years away. But in this case, it was filled immediately. So that gap is now filled. So it may have just gone to fill that gap and it may start coming down again. So you've got to keep your eye on that and don't let that get out of your sight. So the question, trend lines, stop resistance, spot resistance lines, and I profitable for the past 2 weeks in a row, with some losses here and there since it is 50-50, as you will say. FX trader, Renko indicator is a good, keep the direction of the trade. I don't like the Renko indicator, and I'll tell you why. It smooths it out too much. And I like to see what's going on. So for example, I like to see where the breaks are. I like to see what the tails are. I like to see what's going on with the candles. It gives me a better picture of what's happening. The Renko smooths it out too much. I don't like the Renko. It just isn't, it doesn't work for me. Okay, if it works for you, that's great. You can use it. Like I say to you guys always, every single system works, and they've all been back tested by some genius, and you don't need to backtest any system, really. They all work. Every single one works. It's just how you impose the strategy. And this is why I'm putting this video together for you guys. It's not finished yet on how the turtle traders traded. Because, the insane thing is their system only gave them a 20 to 30% win rate. Their system was so based on maybe trend trading and prior high and that sort of thing, and a number of candles back and that. This guy was so, Richard Dennis, his name was, he was so ahead of his time, because, what we would do today is we would have an algorithm trade it for us. We would take a bunch of information, put it into a computer, and the algorithm would do it for us. Well, what he did, because there was no computers in those days, is he took a bunch of traders that knew, a bunch of people that knew nothing about trading, gave them a specific set of rules and made them trade that way. It's the same as us today, taking an algorithm and saying, make it trade for us. But it worked for him. It actually worked for him. 175 million in 5 years. Can't say it didn't work, but I'll get it finished and I'll put it out for you guys so you can get a bit of training on that as well. But it's all about the strategy, and the reason I'm putting it out is because it's so about the strategy. It's all about the strategy. If you've got the right strategy, you can get it right. You can make it work for you. You know. Can you explain why gaps get filled? No, I can't. I literally cannot. I cannot tell you why gaps get filled. We just know in the market that a gap always gets filled. It always gets filled. And who knows why? Who knows why? But it always, always, always gets filled. But the mistake that traders make with gaps like that, a gap down like that, where it's left a gap in the market, is they think it's going to happen immediately, which it did in this case, but it doesn't normally. And or they think it's going to happen in a specific time period. The thing with the gap rule is it will get filled sometime. Doesn't mean that it will get filled anytime soon. You can't trade on a gap. But if you do see something like this, where a gap has been filled, this is where it becomes useful to you. The gap has been filled, so there is a possibility that now that that's been filled, everyone's happy with that, and it could go continuation in the other direction. So do be careful of that. But waiting for it to come back and actually fill that gap, or trading with the basis that it is going to actually fill that gap, no, that's not a trading system. That's just a knowledge in the market that this is just something that always, always happens. Gaps get filled. Sometimes things in life just don't have a specific reasoning behind them as much as, these things happen, and it goes back to that price. It's not because there's money there or anything like that. Nick says some insider information being released to the public after the insiders have their position. Not always, Nick. Sometimes it can be, for example, on a Friday, you go into the market, everything's fine. And on a Saturday morning, some geopolitics take place around the world and something bad happens. And on a Monday morning, the price opens where it opens, with a pre-market orders, okay? So if you're looking for that answer, right, the price has changed because of the pre-market. And, there's a pre-market before you get access to it. So that's why there's a gap, okay? It's not a question of, there's just a gap, right? So if that's the answer you're looking for, Greg, there is a pre-market when the market's still closed. So those orders are all put in place, and that creates the gap. Now, it could be caused by some disaster in the world, some bank going bankrupt over the weekend. While the market's closed, things happen and that gap creates. So no, it's not always about insider information. It's very often a scenario of panic. Normally it's to the downside, the gap, rather than the upside, but it does sometimes happen the other way around, where you have a relief trade. So for example, on Friday afternoon, the world is still having huge scenarios of problems, and it all gets resolved over the weekend and everything's hunky-dory, and on Monday morning, everyone's jumping into the buy, so you get it to the gap to the upside. So that can happen as well, but it's generally caused by knee-jerk reactions and panic while the market is closed. You get the pre-market, and then you get that gap, and those gaps just always get filled. It always comes back to have a look at that. Always comes back to those gaps. The price always comes back there. Very often, it could be said that one of the reasons for that, especially if it comes back to the gap sooner rather than later, then that there was a knee-jerk reaction to whatever happened, and that all settled down, and then it comes back to where it was, and then it fills that gap. you know, you could have a scenario like that, but that doesn't always happen. And very often the gap only gets filled much, much later. It's just a question of things reinventing themselves, resettling. You see, it's the thing you have to look for in the markets that changes everything for you is in the markets, you're not trading on lines. You're trading with human beings, and human beings do things that you would do on a daily basis and think about things that you would think of on a daily basis. They have the same fears, the same worries, the same thoughts, particularly when it comes to money and finance and that sort of thing. So just think for yourself what you would do in a situation. Why do you think everybody else would do something different? Most of them will probably do something similar to you. And that's the point. You know, you're not trading against algorithms. You're trading against people. And people have the same thoughts, the same feelings, and people react the same way. And that's what makes trading so interesting. My rand trade, Brewman, is annoying me. As I showed people earlier, and maybe you weren't on the show yet, but it keeps going into profit and then going back into loss and then going into profit. And I can tell you, my opinion on the rand is it has to get weaker. But sometimes you can get married to things. And, my brain is fundamentally telling me that it should be weaker, and the market is telling me something different. And, it's irritating. But here it is. And, it started to go in my favor and started to do the right thing and head in that direction. But it really does need to break that prior high and go up. Doesn't seem to want to do that at the moment. It's coming back to take money down here. And maybe it can go back up again, but it has kind of broken through my trend support as well. I'm just leaving it because I'm still firmly of the belief fundamentally that this should go in my favor. Now, it wasn't a bullish trend here on the 4 hour, starting to head in that direction. And now it's kind of just broken through that trend support a little bit. It is a matter of concern, but then I have such a big level of demand of money here that I'm thinking bounce into that, come back out again, maybe head on to the upside again, looking at my support, resistance, supply, and demand scenarios. So yeah, I'm not panicking. I'm not major concerned about it. I'm not thinking, ooh, the rand's suddenly going to become strong. Definitely not. I just can't see that. The only effect I can see that's causing this fundamentally is the US dollar on its own. I don't see how the South African rand can be putting much effort into this at all. But the South African rand should be weakening, and it just, at the moment, it just doesn't want to. But it will. I mean, effectively, South Africa's been sanctioned by the USA. I mean, come on. It's like, and tariffs are being doubled, and the country on its own is not doing well. So I can't see why it's holding up so well. It's great that it is for the country, not for me, but for the country. But yeah, at the end of the day, I look at it and think it shouldn't be. But best laid plans of mice and men. What we believe and what actually happens is always often two different things, and you can't always get it right. But there you see again, I don't only trade on just looking at the lines. Sometimes I do have a fundamental view on something, and I look at it from that perspective as well. And then I'll just look at the lines and think, well, okay, it looks okay. You kind of need the charts to take your trades with, so that you can draw a stop loss in. I mean, like this trade is a good example, the South African rand that everyone asked me about now, is you need the lines to draw your line in the sand and say, well, I want to take this trade. I've got my reasons for it, and these are my reasons, okay? And now I look at it and think, but where am I going to put my stop loss on this? Where am I going to say, well, I'm completely wrong, I should get out of this trade? And then I can decide by looking at the chart and saying, well, there's the prior low. I can look at that and say, well, that looks like an area where it's pretty safe to put my stop loss, work out the size of my trade back to my cost, and I can put a take profit in place based on what I know. And that's where the charts become useful to you. That's what the charts are for. Everybody thinks the charts are there to make them a profit. The charts cannot, in any way, shape, or form, predict the market. The charts cannot in any way, shape, or form make you a profit. They can help you manage your trade. They can help you determine where you want a stop loss or a take profit. They can help you see where the other traders are in the market at any one given time. But predicting a trade, it cannot do. That's why we have a strategy, and that's why we live by that strategy to make us the money. Let's have a look at the news while we're here. I think that's it. Let's go and have a wee look. Every time I go on the news, we get the sucks face. Inflation data is set to reveal the hit from Trump's tariffs. Now that's an interesting one with the S&P moving in an upward trajectory. No one seems to care about that headline whatsoever. Yet everybody waits for the news on a regular basis, week in, week out, jobs figures, CPI, all that sort of thing. And they put a headline out, inflation data set to reveal the hit from Trump's tariffs. Yeah, so it says here, CPI inflation report is expected to show a tariff-driven pickup in price increases. Now, nobody's reacting to it. Nobody cares anymore. Nobody's interested in that story. And that's the kind of news you want to keep in your mind and think, ooh, is the market going to continue on going long? How big is the hit going to be? EU lists new $84 billion in tariffs on the US after Trump threats. Is that not going to somehow affect your market? Is that not going to somehow affect your trade? I don't know, guys. It's funny how, they release the CPI data, they release jobs figures, and the markets go crazy. They release news like this, and the markets do nothing. It's incredible. This is the interesting news one, though. Meta is reportedly using actual tents to build data centers. Now, I don't know if you've seen, well, it was called Facebook back in the day. It's called Meta now. But I saw a few years back how they were building these data centers, these centers where they put the servers in. And they had 18-wheeler trucks lining up outside the data centers. And what they had inside them was new servers to put in. So they were constantly adding to the size of these data centers, and they were getting bigger and bigger and bigger. Seemingly he owned one side of the road, and then he bought the other side of the road, and he was building more data centers in there. I mean, this is massive. We're talking huge. And now I look at this headline. They're using actual tents to build data centers. So they're building on more and more and more and more. How big can these things get? You know that YouTube has been announced as the biggest network in the world. They got more viewers than anyone else. That's crazy if you think about how quickly these things are growing. Who would have believed all those years ago? And okay, Vanguard goes big on crypto. So there you go, Bruman. Vanguard's gone big on crypto. All AI setups see funding surges, another firm struggle. It's a bad time to rely on the social safety net. I agree with that. I tell you, these days, you don't want to be relying on anything social. That's for sure. You don't get much from it anyway. And Tesla launches in India with pricey $70,000 model, which is great. And I see all this, and you talk about the social one. That social one is a big bugbear for me, particularly here in South Africa, where I see old people suffering. And, they give them such a tiny little bit of money for a pension. You can't rent a room in South Africa for less than maybe 6,000 or 7,000 rand a month, okay, which is in dollars, not a lot, $300 or something like that. And but that's like a room. I mean, we're not talking about a flat or a house or anything useful. I mean, we're talking about a room here, okay? Yet the government thinks they can give an old person 2,000 rand a month to survive on, and that they'll survive on that. Okay, now I don't know how many loaves of bread you can buy with that, but it's insane. Okay, and then they can't even rent a room, and then they say if they've got more than I think 7,000 Rand in their bank account, they can't claim that pension. So that is cruel. It's heartless. It's absolutely heartless. I cannot believe that we treat our old people this way. And I understand that, okay, these are people that probably should have prepared for their future, probably should have had private pensions, and probably should have looked after themselves. But hey, they didn't, okay? And we're living in a country where, on my side, where more than 60% are unemployed. Can you imagine? You live in America, for example, or the UK, or one of these countries where less than 5% of people are unemployed. And these days, I think it's 3%. I live in a country where 60% of people, 60% are unemployed, more than 60%. And inflation, you just add zeros to the money every 20 years. And it's just crazy how people actually think. But yeah, no, I'm getting off on a tangent here because I'm reading the news. Nissan is going to close its Opama plant in Japan to cut costs. Big bank earnings. Yeah, June CPI report. So there you go. That's the news, guys. And that's me going off on a rant again. So I probably shouldn't do that because I'm probably going to get myself into trouble one day. And that's probably not the best idea, eh? But yeah, it's crazy, guys. It's absolutely crazy. It makes me angry. And there's, what do you do about it? What do you do about it? I mean, it's just crazy. And if you've got a voice, and hopefully this channel grows to a huge size and I can have a voice, and then maybe I can do something about it. But as it stands at the moment, they're just steamrolling everybody. And these government projects where they get involved on tenders and all the rest of it, and the money just disappears into people's pockets. The country's got potholes in the roads. It looks terrible up north. I mean, down here in the Cape, it looks great, let me be fair. But up north, it just looks insane. And the money's just disappearing. I don't know. That's why I think America has stopped sending money over or supporting, because they know the money's just getting stolen. Okay. Where was I? Firewalls, like Nvidia today, closed 164 yesterday, now it's 172 pre-market. I'm so glad about that because I'm so invested in Nvidia. I'm sure the insiders had their position before the release of Nvidia info. Yeah, look, you know what? When you say insiders, I think we're talking, there are people out there that are way ahead of us. I mean, for example, the pro traders have got information that we couldn't dream of having. They've got platforms that are ahead of us. I'm sure they trade a millisecond ahead of us, or a couple of milliseconds. There's lots of conspiracy as well as to how this all works. But yes, the pros, which are 95% of the market, so by the way, are way ahead of us on everything, and they do have the information before we do. I mean, they just do. I mean, they all know each other, for heaven's sakes. They all know each other. They all speak to each other on a regular basis, these guys. So that information is with them, not with us. Okay. Blue Mango, my 2 cents on gaps. All the gaps are not the same, and all gaps won't get filled. You see, that's the mistake, Blue Mango. Everybody thinks that all the gaps won't get filled because they're expecting the gaps to get filled rather quickly. But all gaps do get filled. It just doesn't know. It could be 30 years before a gap gets filled, but it gets filled. Okay, so that's the saying. The saying is not, oh, the gap's going to get filled now. The saying is the gap will get filled at some time in the future. Daniel says gold is looking good for a push higher. CPI, a government number, will always be better than expected. Trump makes trading more difficult than other presidents. He sure does, because he's undecided. One minute he says this, and the next minute he says that. Nothing's easy. Okay. Salaries in South Africa so low, people can't afford to have private pension, and that is also, Blue Mango, a good point. People can't afford private pensions. Yeah. buy Bitcoin. Rob, I'm going to move to Oranje. Daniel. Yeah, Bruman, it's in South Africa. I'll join you there, Daniel. Where's Oranje? Yes, Bruman, go research it. Governments need to represent most of their citizens instead of just representing the campaign donor class. Seems to move quite big again. Most governments are not doing what they're supposed to. Yes, Bruman, it's almost like a problem. I'm just looking through the comments here. I suggest it's the crypto guy. Eventually, all the gaps are filled. You are correct. Every price point on the chart will be reached at some point. Yeah, that's what I'm trying to say, guys, is don't get confused with the saying all gaps will be filled, because the mistake that traders make is they think gaps are going to be filled within a specific time period. The saying goes all gaps will be filled, but we don't say when. Okay, so that's exactly what I'm saying. Don't use it to trade with, don't use it as a trading point. But if a gap gets filled, then you can look at it and think, maybe it could turn around on that gap. So just keep an eye on that. Okay, look, Daniel, when you say you've got to be Afrikaans, you are quite right. But I do know somebody who then there, but okay, so Afrikaans husband, the European wife, that sort of thing, but they do accept that. But yeah, it is a very closed group of people. Yeah, look, I'm open to everything when it comes to all these scenarios, but I just get mad with politicians that just take advantage and don't do what's right for all people. And particularly, I've got a gripe about kids and old people being ignored in the economy and not being helped and being looked after, and it hurts and it annoys me. So those types of things should be taken care of. I don't care who's in charge of the government, who they are, where they're from, whatever. They just, I'm tired of these governments out there that only think of themselves. They're like narcissists. All they do is care about their own pockets, themselves, how rich they can be, how fancy their car can be, how fancy they can dress and show off and look and whatnot, while people are lying on their streets starving. And that is just insane. And particularly when it's kids and old people, that really just angers me. So, yeah, it's got nothing to do with the insane politics that go much deeper with people and things like Oranje, stuff like that. It's got nothing to do with that. But yeah, it does bother me when people are not looked after, and countries are not looked after as a result of selfishness and greed. That irritates me. And countries like ours do need some change. We've been running with one political party for a long time, as in the past as well. It was like that, and it's time for it to be different. I don't know. Something needs to happen. But yeah. Bum, bum, bum. Yeah, Bruman, you can start an Africana crypto bank. Go for it. Call it AfriCoin or something. Yeah, but yeah, don't get me wrong on this one. I'm not even one-sided on this one. I'm just I'm annoyed when people want to run a country. It doesn't matter where it is, what country it is, and they don't do what they say they're supposed to do. People think that when they get into government or they get into power, that they're somehow, it's for them. It's somehow to make them rich or to enrich themselves or to give them power or something. They don't realize they're actually civil servants. They're put there because the people put them there, and they want them to look after the country and to look after them and to look after everyone's best interests, and they never do. They never do. They always look after their own interests. They never look after the people's interests, and that's what irritates me. At the end of the day. And it's fine for some of us who who have enough money to survive through it and enjoy life and live in nice homes and travel around the world if you want to and do what you like and all the rest of it. So you don't really, most of us that can do something about it don't, because we don't care, because we're living a nice lifestyle. We're not worried about that. Why should we? When you actually, when you look at it, those people are suffering. Those people are having a hard time of it. Those people are not enjoying themselves. They're living in huts and starving and nobody seems to care. But then I look at this, the flip side of things, and we come to an election and the same old government wins, and I think to myself, but those people voted for them. So you have to question that as well. Why did you vote for these people? Why did you put these people in power? Look what they did to you last time, getting into politics. But I'm just saying, it always baffles my mind as to why the same people that are starving vote for the government that's in power, unless it's somehow rigged. Why are they voting for them? Why are they putting these people in power? You're putting the same people in power that are messing your life up and making a situation where you can't get work, you can't get income. So that baffles the mind as well. That will never make sense to me, ever. But yeah, by the same token, maybe it's up to those who have a better education or know a little bit more about it to protect those people and to try and educate those people or help them in some way or another the right way. Rob, I may share a link to the town here, or shall I leave a way for people to contact me, for instance? Daniel, I would, in that sense, rather suggest leave a link for people to get hold of you, okay? And you can send it through to them, because I don't want any controversies with politics on the chat here. So yeah, leave a link for people to contact you, and then that you can discuss it further there. But yeah, that is important. There's always differences of opinion and that sort of thing. So you do have to be careful of that. But yeah, no, you're more than welcome to leave your details for people to contact you, or something like that, if you're willing to do that. Because just remember, if you put it out there, then the other 25 people that are watching this show I've got your details. But yeah, no, like I always say, it's always interesting. Have you all liked the show? Have you all hit a like button? And don't forget, on the normal videos, do leave comments, because I will try and answer every single comment. But I don't know if you guys noticed, but we did somehow go over 15,000 subscribers. So maybe I am enjoyed and liked in the media world. I don't know, but it does become more difficult to keep up with it. But I do try and keep up with every single comment. If I do miss your comment, it's not personal. It's just that I missed it for some reason or another. Okay. Rob, looking at the lines you made, is the US dollar, Canadian dollar the right time to buy now? Well, so what you do with the US dollar, Canadian dollar, yes, it is the right time to buy, but it is also the right time to buy if that green candle closes on a green, because you've got two scenarios here. And what I'm going to do is give you the two scenarios, and that is, the one scenario is you get a red candle that counter trades and breaks through the trend support. Because we're in a trend, and I said I would show you how we trade in a trend today, and I did. And we trade in the trend, so we're trading along the support line and below the resistance line on the trend. We can look at other options here, like support and resistance, that sort of thing, and like if it breaks through the prior high and all that sort of stuff. But what I'm looking at here, basic, simple trading, is green candle closes, it's green, it's above the trend support, long trade. Red candle closes below that line to the downside, giving you a red candle down, it's a short trade. So you got to walk both ways here. I would, in all high probability, say to you that this is most likely going to be a long trade to the upside with a green candle. And if I was a betting man, I would say it's going to go long, and I would take the long trade on it. Okay, so looks more like a long trade than a short trade. And I think I did call that in my trade of the day. Let me just say, yes, I have called US dollar, Canadian dollar as a long trade. So yes, it's a long trade as we stand at the moment. Yeah, the like button is completely free. The subscribe button is completely free. And if you hit subscribe and even notifications, then when my videos come up, you'll know when they come up. And like I said to you guys, I'm busy completing a nice video for you guys about the turtle traders, which will probably come out on Friday. And the reason I decided to talk about them is because it's insane how similar their strategy is to mine. And I didn't even know that until I looked into it, and that's actually quite interesting. There is a few differences, for example, the way, they're trading on breakout and that sort of thing, but that's on system. But their system was I mean, it only gave them a 20 or 30% win rate. It's crazy, yeah. Absolutely crazy. Yeah, about 2:30 Blue Mango, then gold should take its direction. I'm hoping it'll take direction. Let me just see. The gold is holding for me at the moment, so I'm not too unhappy with that. The NAS 100 is hitting all-time highs, but same as the US 500. That you, Daniel, that mentioned that the NAS 100 will be hitting all-time highs, but so is the S&P 500. Here's the prior high. It's busy breaking through that prior high, and it's been trending up quite strongly. We've got this kind of flag pattern to the side here, resolving to the upside. If it breaks through and goes past that prior high and goes up, it's going to break out and go long. I'm just a little bit cautious at the moment, thus I haven't purchased it yet, because what I'm looking at is the news. The fundamentals are saying things could go pear-shaped right now with the result of these tariffs and whatnot. So I just want to see what happens with that. But yeah, if it breaks to the upside here, we're actually looking at a very strong long trade. It looks good, but it is still below that high. So that's the high, and you'll get the same on the NAS 100. Look, the NAS 100, the Tech 100 as we call it, the NASDAQ, it kind of controls the S&P with Wall Street, because Wall Street and the NASDAQ is all filtered into the S&P 500. So the S&P 500 is a little bit more saturated, let's say, but it moves in the same direction, and it's easier to trade, particularly if you're a newer trader, whereas the NASDAQ is more difficult. You must remember the NASDAQ is very much based on the top 7, the Magnificent 7, whatever you want to call it, and those are what moves it. And what's probably keeping the NASDAQ up and the S&P 500 up very well at the moment is in all likelihood NVIDIA. And NVIDIA is going to open to the upside today, so you're going to get that boost. You're probably going to get that boost to the upside. But what could drag it down on S&P, for example, is if something happens on the Wall Street that drags it down, whereas the NASDAQ would in all likelihood just go up. So there's a good chance of a long trade on the NASDAQ with pre-market prices on NVIDIA being so high. Morning, Mohammed. Studies have shown that breakout systems are the most profitable long-term trading systems, but also can have major drawdowns. Next roll, then you trade the drawdown, you make the money both ways. Yeah, but actually, Daniel, what actually is saying there is, breakout and breakdown is the same thing. So if it's going short, it's breaking down. If it's going long, it's breakout. And you trade both ways with those systems. It's breakout, breakdown, whatever. But the point being that they run so hard that they make more money. What Nick's trying to say is the breakout system will give you that run that you're looking for. But there is more. There are more drawdowns on it, the more losses, and It's less than a 50-50 system, which is what I'm talking about. But if you work the strategy with that system, with a good breakout system, then you can make a lot of money. So, for example, this United States dollar, Canadian dollar, if you stay in the trend and you trade that in a trend, you might get a good trade, you might get a good long trade. But if it breaks down and it breaks down below that level, it's a breakdown. If you trade that, in all likelihood, you're going to probably get a decent trade because it's broken down. Or if it breaks to the upside, you're probably going to get a decent trade because it's breaking up. And then, the thing is, when it doesn't work out, when it goes against you, there's a lot more failure than there is success with those trading systems. But as you know, we trade 3 ways, which is much better than the turtles traded because they only traded one way with one rule. And there's a reason for that, as you'll see in the video. But from my perspective, we trade 3 ways. And my systems allow us to trade with the trend, allows us to trade in a range, and it allows us to counter trade. Those 3 ways. That's how we trade with our price action, and it gives us options in the market. It gives us places to go and ways to trade, whereas other trading systems do sort of stick to one specific rule. So I'll trade a breakout and I'll trade a trend as well. I'll trade both. And I'll also trade within a range if there's money to be made. So for me, all of them will make me money somewhere down the line. But obviously, the breakout trading does give you that hit, that boost if you get a good breakout. Yesterday, I took a Euro Great British Pound trade. Euro Great British Pound, I took the breakout above the last prior high, went, and it made some money, but it didn't continue. But it still could go on, not on this platform, by the way, on another platform. But it's okay. That's my cash account, I think, yeah. But that is, I expected it to go a lot further, but it might still do that. It might come back and retest and then go. But when I saw it break the prior high and go, for me, it broke the double top. So for me, that was a long trade. I took the long trade, and it'll probably in all likelihood still make me some money. But other than that, but as Nick says, these break down quite a lot. So this could break down and go to stop loss, and it's a failed trade. But most of them do, well, not most of them do fail, but when they do work, they work well. That's okay. If it goes bad, it goes bad. We just live with that scenario. See this one. See, I was expecting it to actually come all the way down and take this money. I see there is a green candle there now on the South African Rand. Okay. Yeah, as drawdowns are still bad because of the false breakouts. You see, the way to avoid the false breakdowns and breakups is to wait for break and retest, as we call it. I don't know if I've explained the break and retest to you guys, but let me see if we've got it here. No, if you look at gold, does it show it here? Not really, no, it's just a straight breakout. On most cases, I just trade the breakout because the retest doesn't always happen. But if you're a cautious trader, you'll do the break and retest, which is, okay, so here's the DAX. Let's say you wanted to take a short here and you got the red candle. It breaks through on the red candle and you think, okay, I got a short trade here. Then you wait for the retest. So now it's retesting. And then if you get the red candle going out of here, the retest is complete, and then it will probably continue on down. So what a lot of traders will do is wait for this breakdown and then a retest and then go from there, and similar to the upside. So yeah, if you're cautious, you'll wait for that retest. But as you can see, like for example, here, there is no retest. It's just broken straight up. I very seldom actually wait for the retest. I'm a bit less cautious on that, and I'll just go for it. But if you want to wait for the retest, that's the thing to do. For example, here on this Euro Great British Pound, I don't wait for any retest. I saw the green candle break up. As soon as it broke up, I'm in. I'm going for it. It's broken the double top. I'm going for it. Now it might come back and retest, and the cautious trader would wait for this to come all the way back here, retest it, and then take the long to the upside. I'm not that person. I'd rather just take the trade. On this account, I might do that. I might wait for the retest and then take it and see how we go. Maybe get in anyway. But yeah, that's the way to avoid what they call fake outs and breakouts. You just got to look at the market from a different perspective, because we tend to look at the market from a perspective of charts and rather look at the market from a perspective of their human beings on the other side of that chart. Those human beings, what do you think they might be doing? What do you think they might be thinking? And then if you can kind of read that into your mind, then you'll kind of get an idea of where you might want to be in the trade. Yeah. Take a break, move the wrong direction, reset your thinking about the trade you made. Box a 50-50 with every trade, whatever you do. This the big money rules the roost. The big money does rule the roost. The big money rules the roost in a rather big way. But, you know, that's a thing to consider in the market. When you're thinking about the traders you're trading against, remember what you're trading against, bulk, is the big money. What are they thinking? What are they doing? And that's why you use the charts. That's why we as retail traders always use the charts to trade, because we're thinking, what are they doing? You know, at the end of the day, and we're trying to make some money out of what they're doing. And all the years, I mean, imagine how many systems there are. Imagine how many people out there have actually designed a system to make a profit in the market. How many traders have sat down and worked out that if you put this line in and do this and you do that, then you're going to make some money. And all through the years, it's been difficult. And there's no real easy way, let's say, to do it. And that's why I actually brought the video out, or I am bringing the video out about the turtles, is because, you know, Richard Dennis took a bunch of traders, or a bunch of people that knew nothing about trading, and believed that they could be trained into a specific set of rules of trading and make money. And he was right. They made $175 million in 5 years back in 1983. You can imagine what kind of money that was back then. And how did he do it? Well, I'll explain all that in the video, but it's just really, really interesting to me that sometimes you can come across a system or a strategy that will work. What did I just do? I hope I didn't trade out of that now. Something stupid. Don't think so. No, I'm still in there. That's fine. I just made it bigger. That's all. But yeah, like I say, you find yourself getting involved in systems, and like I say to you, if you do watch that video, do be careful, because the system won't make you the money. And even their system, it was a breakout system, but only 20 to 30% of their trades actually worked. It was all in the strategy. The money was all in the strategy, and it's the same as the way I show you the strategy. It's the same strategy, nothing different about it. It's all about managing your risk and keeping your risk the same on every single trade, or as close as possible to the same. It doesn't have to be exact, but it does have to be close to that amount. And try and keep the losses small and make the wins big. But he actually got people to trade to a specific set of rules. And it's easy to do that when you take the emotion out of it and it's not your money. When it's somebody else's money, then it becomes a lot easier if you're just following that person's rules, because if anything goes pear-shaped, you can say, but I followed your rule. I did it exactly as you told me to do it. So it takes the emotion out of the trade, because you've been told to trade it that exact way, which is what makes pro traders that much better at it, because they're told to trade a certain way or to buy a certain thing. Sometimes when you get the feeling that the price is high enough and you should take the profits, it will go down. You know, FX Trader says here, sometimes when you get the feeling that the price is high enough and you should take the profits, it will go down. And that actually happened to me yesterday with the Nikkei. And but on the Brent crude oil, it was so obvious. I mean, I was long on this, as you know, on most of my accounts, and I traded them all out yesterday afternoon, every single one. When I saw that big red candle coming down, and I was just like, it's a pincer top, as I call it, the two together, and also the candle was growing fast, which means something's happened. Now that can also turn around or whatever the case, but I just looked at it. Feeling was there, get out, and I opened all the accounts and closed Brent. And there you go, all the way down. Now I'm looking at it's broken through my trend support here, and it looks like it's come back up to retest and it wants to carry on down. So, but I am waiting for a signal for a re-entry because I still believe it should pay us off at somewhere down the line. But yeah, you're right. You know, you just get that feeling. You just know, hey, because my target was way up here. I mean, I had a really strong target on this, and I thought, it's just not happening. It's just not happening, and it didn't. It broke away. So now I'm just. I still want to look for that target. I still want to look for those trades, but as I say, I dumped them all with a view to. We'll have another look because it wasn't looking good. That was also just a feeling. Nikkei as well. Same thing. Yesterday things were turning against us, so I dumped those. But you see the opposite side of the flip side of the coin is, for example, the South African Rand. You know, this one, I'm staying in it with a view to, I got a feeling that eventually it's going to go in my favor and it's going to work out because the fundamentals are telling me so. It's not actually a feeling. It's because you know kind of what's happening in the market. It's because you're following the market. It's because you see it on a daily basis. And it sits in the back of your mind. And although you don't realize it, it's always there. It's always there because you're a trader. You're trading and you're making money. Traders always have this sixth sense. And it's not really a sixth sense. It's because you know what's happening in the market constantly. You always know what's happening. You always know what's going on. That's just really what it's all about. Yeah. Said and done. How do you know when you will get a better price? Yeah, you know, Daniel and Nick are discussing how you know you'll get a better price. Daniel is saying you never know you're going to get a better price. And Daniel is not wrong. You know, you don't know if you're going to get a better price. But what you do on the charts is you look for the high probability trade. You look for that trade that's a probability. You look for that, you know, like I said to you earlier, the charts can never, ever, ever, ever predict where the market's going. They can't tell you where the market's going. All a chart can do for you is allow you to position your trade and to work out where you think the market's going to go based on what happened in the past. So when you look at what happened in the past, you think to yourself, well, I want to take a trade, but what happened before? Because, you know, humans are creatures of habit. They'll probably do it again. That's why you get charts. So, yeah, how do you know you're getting a better price? You don't. And you see, the stock market's not like the supermarket. When you go into the supermarket, there's a special on the go. So you know you're getting a better price. Well, at least you think you do, unless they're, you know, damn scamming you or something. But if you see a special, you see something cheaper, you think, well, I'm getting a better deal on this. You know, it's quite easy to sort out what you want to buy. Or if something is more expensive than the shop you just looked at, then you know it's expensive, it's overpriced, so you're not going to buy it there. You're going to probably go to the other shop, spend more money in petrol going there to buy it, but yeah, you'll go there and go and buy it there. That's the thing. The supermarket mentality in stock market doesn't work, or in Forex trading, commodity trading, whatever. Because in the stock markets or in the markets or in the Forex trader, in the trading market, let's say, if something's more expensive, it's in all likelihood probably good, and there's probably a good reason for it. So it's probably a good buy. And if something's cheap in the market, it's probably rotten, it's probably bad, and you probably shouldn't be buying it, or you should be selling it. That's the difference between the market and the supermarket. So that's why a lot of people go with breakout trading, because they feel like with a breakout, the price is good, and in all likelihood, it's probably gonna make you some money, and it's a good deal, because an expensive product in the market is a good thing. So how do you know you're getting a good price? No, you don't. But what you do is you look at it and say, well, if it's gonna be that expensive, and this thing is pushing up and it's bullish and it keeps on going up, for example, like this United States Canadian dollar, the dollar against the Canadian, it's going up. So you're thinking, well, it's getting expensive, but it's in all likelihood a good price. It's going to get more expensive because it's going up. It's bullish. You're following with the trend. That's the only way I can kind of explain that. But yeah. Regarding better price, your key levels should be your better price, or am I missing something? You're only making money by managing a trade. You're in managing your risk when you're in a trade. Only make a profit at the end looking at charts during your planning. Okay, so what I'm going to do is I'm going to answer this question in general again, and that is what I just said. Your key levels, as Bumango said, would be your better price, but there's no such thing as a better price in the market. What you're getting in the market is a price where you feel the market's going to go in your favor. So it doesn't matter what it costs, because you see, here's the thing. Let's say a product is ranging. I'm actually gonna, the easiest one to show you guys on right now is gonna be Bitcoin, and Bruman's gonna love me for this, but here's Bitcoin, and Bitcoin, if I was to go far enough back here, you'll see it's traded between 70 and 124,000. So 70,000, 124,000. So what would you say is a good price on Bitcoin? So any normal human being with a normal supermarket mentality would say, well, on Bitcoin, 70,000 is a good price. And I would say that as well. If it went to 70,000, I'm going to buy it. That's a good price, because the last time I saw it at a low price was at 70,000. Since then, it's gone to 90,000. It's traded in a range between 100 and 110,000. And now it's broken to the upside and gone to 124,000. How many of you would have bought it at 112,000? Because it seemed expensive. How many of you will buy it if it drops to 70,000? Because it seems cheap. Now, here's the quandary on this, because now you look at it and say, well, 70,000 is a good price for Bitcoin. It's a good price. But what if it's all ending? You buy it at 70,000, the next day you wake up and it's at 40,000. Now you've got a problem, because suddenly 70,000 is not cheap anymore. You've lost half your money. You see, you can't buy stocks or Forex or coins or anything based on the actual price itself. Yes, price action, but you can't look at it as, oh, it seems cheap there. So the only way to do it is to look at your levels and to look at where you stand with the support, with the resistance, with the breakouts, with the trends. This is why I always say we trade the three ways. We trade with a trend, we trade counter trade, and we trade in a range. And you trade within those areas, and that's why we manage risk, because we know that there's no such thing as expensive or cheap, because we know that there are levels that you have to measure, watch carefully, and draw a line in the sand with to protect your capital, because your capital will get wiped out quicker than you can say boo. You have to be very aware of the fact that you don't know if you're getting a good price. What you do know is you're buying it at the right time. You're buying it because it's taking some money out of a supply level, because it's hitting a support or a resistance because it's bouncing off a trend line or because it's breaking through a trend line, that's the right price. But looking at a price for what it is can be very dangerous because psychologically we get caught up in things, and Bitcoin is a good example of that. We all know that just the other day, Bitcoin was at 70,000. So every single one of you here on this chat right now, every single one of you, and at the moment there is 36 of you, which is great. Thank you for watching. All of you will know that Bitcoin was at 70,000 the other day, and all of you in your minds, and don't tell me that you're not thinking this way, think 70,000 is a good price for Bitcoin. Every one of you will think if it went there right now, if it went to 70,000, you'd all be thinking, oh, gotta buy Bitcoin now, haven't I? And that's the mistake. The mistake is you're thinking that the price is cheap, but I mean, you would have a red line to die for. Nobody buys on a red line. That doesn't work like that because you're just going against all of your strategies if you do that. So nobody's going to do that. Nobody's going to buy at that price. Everyone is going to sell. So it's you just don't know if you're getting a good price until you watch your levels, you look at where you stand, you trade with the lines, you trade with the systems. You use the systems to pick your trades, your high probability trade. And then you move on to the strategy, and you manage the trade, which is why I'm saying to you guys, I've made you this video about the turtles because they had a system that was, in all honesty, it was pretty ridiculous, okay? It works. It's a breakout system and it's a trend system, but it failed most of the time. It had more drawdown than anything else. It failed most of the time. So in other words, the system, the win rate doesn't make you money. The win rate doesn't make you money. What makes you money is your business plan and your strategy. And if you follow your business plan and your strategy, then you make the money at the end of the day. That's all it's about. And that's why I'm trying to put that video together for you, because it ties into what we do on a regular basis and how it works, and how you make your money. That's what it does. The only way it's going to work, or the only way you're going to identify a price is by understanding that you have to work with your system first, and then understand that your system's not going to make you money, and move on to your strategy. Okay. Only make money by managing trade. You're in managing your risk and trade. You buy herd mentality. You buy what the herd wants. So how to identify institutional movement in equity stocks? You see, that's what you use the charts for. You use the charts to identify the movements. Now, when you say how do you identify an institutional movement, every time you see a movement on the charts, it doesn't matter whether you're trading equity, Forex, crypto, blue cheese, orange peels, I don't care. When you see a movement on the charts, that's an institutional movement. Why do you think it's a retail trader movement? Retail traders make up a minuscule part of the market, tiny part of the market, less than 5% for sure. So every move that you see, every single move that you see in trading or buying is an institutional movement. The institutions are all working in tandem. They're all out there buying, selling. They've all got their ideas and their systems and strategies that they use. For example, the example I'm using with what I'm talking about in my next video with the turtles and that sort of thing, they would have been considered part of the institutions because they were trading large sums of money. Now, how do you identify an institutional movement? Just look at any chart, whichever way it's moving, it's an institutional movement. Believe me. So, no, you don't sit and try and identify institutional movements. You take your levels. We trade three ways. We trade in the trend, we counter trade the trend, and we trade in a range. That's it. The counter trading of the trend is basically your breakout. That's breakout trading. Trading in the trend is trend trading, and range trading is range trading. And that's as simple as it gets. That's your position. That's your system. That's not going to make you money. The charts cannot predict which way the market's going to go. The charts can't predict a profit for you, and win rates don't make you money. You move over to the strategy, and then you try and make more on the wins and lose less on the losses. And that's exactly how all the pros make their money. Pros don't make money by winning trades. They make money by having a strategy, making a profit. Do you think the pros make more wins than losses than you? Do you think they've got a higher win rate than you? Do you think that the pros have all got 100% win rate? Do you think they're sitting there making just wins all day long? Just asking, is that what you think? Because you want to follow institutional money, do you think that all the institutions are right? Because if they were all right, bearing in mind that they make up 95% of the market, if they were all right, don't you think that the market would be completely inefficient? Don't you think that the market wouldn't work because all the institutions would push the market in the same direction? So everyone would be buying and no one would be selling. Because believe me, if the market was buying, if 95% of the market was buying, then all the retail traders would be buying as well, because they would see that big green candle and they would buy with it. Then you'd have 100% of the market buying, completely inefficient. It wouldn't work, would it? Because no one's selling. Who are you going to buy from? Who exactly are you planning to buy from? Where are you going to get that stock from if no one is selling? So in other words, an efficient market requires someone to be right and someone to be wrong. So anyway, that's not to say that they would always be wrong in every single scenario. It's just a scenario of somebody has to be right, somebody is going to have to be wrong for the market to be efficient. Somebody has to buy, somebody has to sell. It shows that in life we don't know the future, we just flip a coin and see where it takes us. That is true, Daniel. We just flip a coin and see where it takes us. Please unabbreviate RRG charts and tell me what you are talking about. There's so many abbreviations and terminology in trading that it just it baffles the mind, and it's insane. And I know people like to abbreviate things, but it drives me insane as well. There's a lot of stuff on the market. I know most of the stuff, but some of the stuff I haven't even looked at. So just unabbreviate RRG. Tell me what you're talking about. So it's not a win-win, as FX Trader says. No, it's not. You don't just win. Yeah, you might have to lose some. You know, from the beginning, from when I started making videos for you guys, I've been telling you, and even I told my friends before that, you've got to learn to understand that you're going to lose. You've got to understand that you're going to take losses in the market. Once you get the aha moment and you understand that there's going to be losses in the market, and you understand that you're actually going to lose some money, then suddenly you realize that, hang on, if I'm going to lose some trades in the market, then surely I've got to manage that loss so that I don't lose too much. This is where the trick comes in. And that's when you start to get that aha moment. And it takes a long time for most people to get to this point. So you guys that are sitting here with me now are in the fortunate position of getting my experience over and picking this up probably in the early stages of your trading career. And it'll help you in the long run. Even if you don't use it 100% now, it'll always be in the back of your mind. You'll always know about it, and you'll always have it available to you. So even if you're still a firm believer that the charts are going to make you money, even if you're still a firm believer that the charts are going to predict the future for you and make you a win, doesn't matter. You've heard what I've said. It's going to stick in your mind, and somewhere down the line, it'll come back, and you'll realize and you'll understand what I'm talking about. But it's been proven in the past. It's been done in the past. And a perfect example of that is, like I said, the next video that I'm bringing out for you guys, which I haven't even put a title properly on it yet, but it'll talk about those turtle traders and how they made money, and it'll explain to you this it's a very similar strategy to ours, and you'll see why I'm talking about this. It's been proven over and over again that the lines don't make you money. It's the strategy that makes you the money. Rob pulled out his frustration so we don't have to. As you say, Daniel, I've gone through it, been there, done that, sold a few t-shirts. And I went through many years of believing that the lines are what make you the money. I went through many years of believing that you could trust a chart to take you to the next level. And at some point, you sort of cross that bridge and realize, wait a minute, this isn't what makes you the money. Do you know what's really crazy? What really irked me for many years is I realized that the pros never told us, that they always keep it to themselves. When have you ever seen pros telling you how to trade the market properly? When is a true guy who works in an institution come out and said, this is how it actually works? You know, they actually don't. They don't come out and tell you. They keep it to themselves. And everybody out there, all the retail traders, think that it's lines and it's this system and that algorithm. And the guys are going off on a tangent and wondering why 60 to 80% of traders lose money, thinking, why is this? Why is this happening? And like I said before, on the 5-minute charts, we've actually got a statistic of 99% of traders losing money. And everybody's running around thinking, why is this happening? But it's because they've somehow propagandized us into believing that charts will somehow predict the future and somehow predict how you're going to make money. And everybody gets involved in that. Everybody follows these indicators and these systems. And then the pros are just that one step ahead with all the news and information. They've got much more information than you have. And they can easily take your money. So, yeah, I thought about it way back when. And I thought, no, I've stumbled onto this great information all these years ago. And it's obvious that this is what you need to do to make the money. But why has nobody ever taught me this? Why has nobody ever showed me this? It's interesting, eh? Interesting. And it's so strong in the markets that people won't even understand or believe you if you tell them what I'm telling them. They'll think I'm talking rubbish, you know? But they'll still think that the only thing that can make them money is charts. It's crazy. Absolutely crazy. But yeah, you need the charts. You do need the charts. Without the charts, how can you take the trade? Because the charts give you that line in the sand, and they basically, if you look at the charts as human beings in the background, there's little human beings, little dwarfs running around behind there. And did I just say that? Then picture them as what they're doing, what they're buying, what they're selling. And if you follow that, then you'll actually get quite a lot of information out of a chart. And you can sort of pick which way you want to go. But when you pick a trade, it's very much based on, which way should I go? Experience talks to you when you're looking at a chart. That's why I dumped the Brent crude oil yesterday, because of things that I've seen in the past. What did I see in the past? The first thing I saw was breaking above the prior high. So that for me was like, ooh, we're going to make money here. And the next thing I saw was a pincer top and this thing going down. Suddenly my whole view on everything changes and says, we need to sell this. We need to get out of this trade right now. And which is what we did. We got out of the trades and there she goes. But that is just years and years and years of looking at charts and seeing things happen. And oh, here comes trouble. And I almost thought I was going to see one of these, but we didn't, at least not. And like I say, I am looking for another entry on that, because fundamentally I still think it'll go the other way. So you have to look at these things for what they are. So gold at the moment, what you can do, if you're long on gold like I am, you can actually draw another trend line in here if you want to, just to cover yourself. But I don't think it's going to get this low, so I'm not going to bother. You could also draw one across here just to cover yourself. You could say, what if it goes from here to there, very short term. Say, look, if it breaks back through here, maybe I should have a relook at the whole situation. But you don't need to. It has broken to the upside already, is heading along that direction. What I am looking at is this prior high here. If it breaks through that, we're talking about some big money. So what we could do is just draw that line in. Just say, if it breaks through that, we're looking pretty good, looking pretty strong. Then it's going to go all the way most likely and give us a good run. But I don't like to draw too many lines into the chart, as you guys know, because if you draw too many lines in, people look at it and it's like totally confusing. I could actually take this downward one out now. I'm just leaving it there so that you guys can see it. Uh-oh. Sometimes I press the wrong buttons. There we go. Biggest profit? Jeff asked, what's my biggest profit ever? Probably about $100,000. Biggest loss? I have blown $1 million account before, a long time ago. But loss in general, can't remember actually. I don't really think about it. Probably put it out of my mind. It was probably 50,000, 60,000, somewhere there. I've had some big ones. I've had some really big ones though. I had some nice ones on shares as well. When I was trading shares, I think there was one company that went from $6 to 90, just flew up. That made an absolute fortune. Yeah, I've had some good ones. It's 30 years of trading, dude. It's a long time. And I've had some nasty ones and I've had some good ones. And you go with it. There's losses and there's wins, but you just need to make more wins than losses over the time. And then you come out on top. That's fine. But yeah, those losses that I took, those big losses that I took, when I took those big losses, understand that was before I believed in stop loss. There was a time when I didn't believe in stop loss. And those were stupid times. This is why I show you guys all these things, because I've made all these mistakes. I've done all the dollar cost averaging and moving the stop loss away and praying for the trade to come back. I've done all that. Been there, done that, sold a few t-shirts, lost a lot of money. And but then I've also had the good side of trading, where the bonus, where it makes so much. And then I've also experienced the overconfidence and the mistakes that you make when you become overconfident and you think you're infallible and you can't lose and that sort of thing. And then you start taking ridiculous trades. So that's why I show you the guys these things, because I've been through it all. I've done it all myself. I'm pretty sure everyone does it. As Daniel says, biggest loss is the trade I didn't take, biggest win is the trade I did take. Yeah. Absolutely. My biggest win was the S&P 500. And obviously I had some really nice wins on the VIX when I was trading it with IG for a while. 50,000, 60,000, those were nice wins. Those were good on the VIX. Those you just leave, but you leave them for a long time. And then when they win, they're like, woof, they give you a big win. But yeah, the S&P 500, that was the last time Donald Trump was in power. This time he's been very difficult, but last time the market ran beautifully. And I just kept adding to the trade. And it just kept on going up. It was beautiful to watch. That is when you feel good about being a trader, is when you get into a trade like that, and you start with a few contracts, okay, and you put it in and it goes up, and you add a few more and it goes up, and you blink your eyes, you're sitting with 300 contracts on the S&P 500, and it's just, I mean, one tick is $100,000 or something stupid. It's ridiculous. I tell you what, you get to that, and yeah, and it goes 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 and it goes, and it just keeps getting bigger, and you just keep adding more and adding more contracts. The problem with that is you start to become kind of overconfident and kind of like infallible, and there's a lot of money to be made with that. But yeah, big profits there, big profits. In fact, yeah, I think I actually made more than that there, if I remember correctly. It was actually quite a biggie. But those were good days, huh? Those were good days. This year, bit slow. Nickel in trades. Have you ever placed an order 15 seconds before the CPI number come out like I'm prepared to do? Yes, I've done that. I've made that mistake. Yes, I've done that. Thinking that I know which way the market's going to go. You know, like I said to you guys before, I spent many years hanging my hat on the news, waiting for the CPI, waiting for the jobs data, that sort of thing. And just before it comes out, I hit a trade, and then it goes the other way. Shit. Yeah, some of the things I've done, I don't do that anymore. I don't even want to see that news at all. It just made me grey. But yeah, I spent many years doing that, just following the news, waiting for that news to come out, thinking that I knew which way it's going to go. And even if, or as the news comes out, like the news comes out and it gives you that news and it says that jobs figures are this or the CPI is this, and you think, okay, it's this way, it's positive, I'm going to buy. And then it goes the other way and you think, why did it go the other way? You know? Well, that's because the real money thinks that that's actually not that great, if that's going to do this and it's going to do, and they just fool you, you know? And I realized, this is rubbish. I'm not doing that. So no, I don't trade that anymore. No, that's crazy. But I've done that. Yeah, totally. Biggest one was when I accidentally hit 25K in Bitcoin, and it went from 3,000 to 20,000 a week. Yeah, no, Nicholas is, yeah. Some of the stuff that we've done, well done on the 100K trade. What was it? Yeah, okay. There we go. Yeah, sometimes things go well, sometimes things don't go well. You have to live with that, guys. You have to live with that, and you have to understand that in your trading career. If you're new to trading, you're getting into trading, and you're thinking it's all going to be wins, be careful of that, because somewhere down the line, you're gonna face losses, and you're gonna face hard times, and then you're gonna face times like I spoke about now, where I had that trade and it just kept on going up and up and up and up and up and up and up. That's why I actually thought this time when Donald Trump went into power, I thought maybe I should buy the S&P again, because it just kept going up last time. Maybe it'll do it again. And it is. It's doing it again. But I missed it this time. Last time it made me a fortune. This time I kind of missed it. Ooh, there's a breakout on the S&P, guys. I wonder if it's going to work. Interesting that, isn't it? You see, now, is that expensive or not? That's the difficult one, isn't it? Is it expensive or not? Question. The question is raised, whether it's a good trade or a bad trade. Always difficult to answer, always difficult to compute. Yeah. Guess what I'm doing? Stop loss. I'll put the stop loss in a safe area. And I'll take a small amount. And I'll put the take profit at you know what? I'm going to go big. Say that this is going to get to 6,600 by the end of the year. I'm going to buy it and I'm going to hold it. If it gets to 61.60, we lose 280 bucks. I'm actually going to bet on the S&P 500 going up. Take a trade. There you go. Oh, don't tell me I sold it. Ah, come on. What happened there? Obviously made a mistake. I said buy order, didn't I? I said buy. So what went wrong? Stop loss. Take profit. So what's wrong with this? It's a buy order. Why would it give me that hassle? I want to buy it. I'm the right way around here, aren't I? That's better. Now we got the buy order in. I don't know why I did that, but anyway, yeah. Okay. Last time it showed as a sell order. Cool. Tis the season to be jolly. Crazy old me, eh? Yeah, there you go. So now I bought the S&P 500 on a breakout at a very high price. Will it work? I don't know. Maybe, maybe not. We'll see. It's worth the risk because I've been saying since the beginning of the year I'm going to stand by my guns. I think the S&P is going to 6,600. Unless something goes insanely wrong in the next few hours or today or tomorrow, whatever the case, then I'm standing by that and I'm thinking breakout, let it go to the top. Nvidia is going to open at an extremely high price, probably going to push the S&P 500 up anyway. So what the hell? Let's see what happens. See if we get a good trade on that. And if we lose out, we lose out. So yeah, there we go. That's how you take a trade, by the way. Not the first one where it went wrong. I don't know what went wrong there. I'm pretty sure I was buying a buy and it said sell. I was like, what the hell? It went completely nuts. But anyway, the buy went well. And we now have a buy on the S&P 500. And maybe it'll make some money again. Who knows? That'll be great. Let's actually go and add it. Ah, goodness me. If I can add it on the other one now. Yeah, that would actually be a really nice trade on one of my other accounts. I just need to open it up here. You guys won't see this, but it's fine. Just going to do this quickly. Hope you guys don't mind, but I need to buy it. Dum, 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 dum. What on earth? It's kind of a 1 minute chart. Need to buy it on the 4-hour chart. Goodness me, I was looking at that and thinking, what on earth is happening here? Okay, so US stop loss in again. Stop loss. What was the stop loss? 61.60. Right? 160, and the take profits 600. 600 take profit. Yeah, that's what I was looking at. And I think we'll have, see, yeah, that'll do. And I'm going to buy it there. Perfect. And now I'm buying this one. I'm buying the US 500. Okay. Position successfully added. Good. Going to leave you there as well. That's perfect. Switch that account off. There we go. Go back to this account where you guys are. Sometimes I do things that are crazy. Okay, guys, I think we've had a really, really good session today. A really, really good show. I've just done another buy on the S&P 500 on another account, on the 100,000 account. So, all thumbs, because, yeah, I could be, doing it wrong. It's 50-50, isn't it? Could go either way. But, yeah, that's how we play. That's how we roll. That's how we go. And obviously, the United States dollar ZAR is not going well, is it? No, as usual, it's giving me a headache. But okay, that's one of those things. We'll get around it. But guys, thanks for watching. I'm going to head on my way now. Going to hit the road, and I'll see you guys on Thursday. Thursday, we'll have another fine live show, and we'll have a bit of fun, and we'll talk a little bit more. And then let me get that video finished for you guys with regards to the trend trading, like the turtles. And thanks for being here. It's been great having you guys on board. It's been great having you guys here. Don't forget, I hope all of you have liked, and I'll spot you on the rebound. Keep your feet on the ground, reach for the sky, and I'll catch you guys.